It's a red day across global markets, including the crypto market, as the Iran-Israel crisis continues to escalate. And this has spooked investors, resulting in double-digit gains across the majority of the altcoin market today. In today's video, I'm going to tell you exactly what I'm doing during this time of panic. Should you be buying? Should you wait? I'm going to run through some of the scenarios. I built a custom dashboard today using AI that runs probabilities based on thousands of potential scenarios and what could happen to prices. So we're going to go through that later in the video because I think this is going to help you a lot in terms of navigating these times. And I'm also going to talk about why I am relatively risk off in a traditional sense right now and how my portfolio strategy has changed in recent times. So towards the end of the video, I'll be discussing why I'm opting in these market conditions to actually hold more cash. There's a very deliberate reason behind it, which is setting my portfolio up for success. And I want to unpack that. It's extremely relevant right now because every time we see times of turbulence, this strategy, I think, really comes into play. So without further ado, let's get into the market update here. Looking across the market, you could see most coins are down, and obviously this isn't just relevant to crypto. You can also see pre-market for the NASDAQ and S&P is down between 1.2 to 1.5%, and this is off the back of the Israel strikes on Iran. The Israeli military says it launched a wave of strikes against Iranian military and nuclear sites in a major escalation. Strikes have also hit central Tehran. Iran's supreme leader has warned Israel that it must expect severe punishment following the crime of attacking Iran and killing several top-level military commanders and 6 nuclear scientists. Since then, Iran has said it will respond harshly against Israel and the US following the attacks. And just recently, there was breaking news that Trump came out and said that there is actually much more to come on Israel's side as well. I'm not going to get too much into geopolitics in today's video because I don't think any of us know exactly how this is going to play out. But what I will do is take a bit more of a focus on the probabilistic outcomes as it pertains to markets and what has happened historically during times of war fears and escalation. But I do want to say, on a human note, what's happening is horrible. And obviously, markets aside, we just don't want to see this in our society. So I feel for everyone, especially those that are affected in the local area. Looking at how the markets have responded, as I mentioned before, you do have a minus 1.2% open on the implied open on the S&P. That'll be going live around the time this video goes live. You have a minus 1.5% open on the NASDAQ anticipated as well, as the pre-markets are indicating. Obviously, investors during times like this, after especially such an aggressive run-up in the equities market, they're going to de-risk, right? And they're going to take some chips off the table, as pretty much happens every single time, just to be a little bit more defensive. And then, of course, if there is some sort of de-escalation, and we're going to go through that scenario later in this video, then you'll likely see them redeploy back into the market. And that's where we see recoveries. Typically in the markets, the initial fear, the initial wave of panic, and the initial announcements are typically where the market has its worst drawdowns. And then, generally speaking, as you head into some sort of resolution or as certain anticipated events play out, that's typically when you see markets rebound. So we have seen this cycle, and I'm going to get into some of the exact examples soon, that these events, I wouldn't say they're FUD because they're definitely, tangibly, materially impacting markets, but they do, the uncertainty and the fear element tends to be what drives markets down. It's the same premise that markets always operate on because they are forward-looking. Buy the rumor, sell the news, I guess, is the best way to quantify it. Oil is also rallying alongside gold. This typically happens during geopolitical times of uncertainty as well. So those are some of the indicators that the market is also risk-off alongside equities. But now let's take a deeper look at crypto, because I presume a lot of people that subscribe to this channel are heavily exposed, or at least trade in the crypto markets, and want to know how this is going to affect markets and how I'm actually playing this period in the market. So I guess a good place to start would be looking at Bitcoin. You can see Bitcoin has dipped down below the mid-range that I pointed out as the key must-hold level. in the last video. It's now dipped back into this money noodle, actually wicking into the bottom here at 102.5, and it's looking a little bit weak. I mean, if you go into the 4-hour chart, you could see that it did break the momentum. I did say in the last video I would look to target this as a potential bid zone, but pretty much it rocketed straight through this zone. I did fill one order in that level before swiftly cutting on Bitcoin. Didn't get any fills on alts. I'm going to discuss why that's the case later in this video, but Bitcoin now trying to find its floor. Generally speaking, when you're in the middle of a range, it's not typically the time to make big moves. The time to make big moves on Bitcoin are at the extremities of the range. So range low, range high, and unless proven otherwise to either side, you kind of respect ranges. This is something I also discussed over the last few shows, saying, look, although, I'm optimistic about the altcoin market and I think there are good signs, especially regards, to ETH, BTC, DeFi, some of the regulatory tailwinds, what you have to accept is that we are heading into resistance, and resistance is resistance until proven otherwise. And that was the one thing, stopping me from heavily positioning in the altcoin market, despite CT, crypto Twitter, being super bullish at the time. And I'm glad that hesitation held me in good stead, because although I didn't know this Israel thing was going to unfold, what I did see on the charts was just a reason to be cautious, given the fact that we were heading into range high. And a reason to be bullish, in my opinion, on the contrary, would be a testing of range low. 100K Bitcoin, this is, your key line in the sand. It also pretty much lines up with the bottom of the money noodle here. If we do continue to move into this zone, and that's something I'm going to discuss in a minute, this could be a decent place to bid Bitcoin and corresponding alts that align on their respective high time frame levels, and then obviously you can cut below. And then your other option is just waiting for strength again, right? You could say, look, I don't know what's going to happen with the war, with the escalation, with the de-escalation, so I'm just going to sit back, I'm going to wait and see what happens, and then if things start to de-escalate, obviously Bitcoin should come up, you should see a reclaim, you should see prices starting to hold. That can be a long signal to potentially target range high again. So in a way, the technicals are going to be a blessing during times like this, because although they don't tell the full story fundamentally, what they do is give you a blank canvas to be able to, shut out all the noise and at least have some substantive basis to trade off. And that is really where I think technicals shine at the end of the day. They don't predict the market, but they do at least offer you clear-cut signals, black and white signals that you can pivot off. And I think especially in environments like this, that's really helpful, because these are, super unpredictable environments. We'll go into the scenarios in a minute. You'll see that there are a range of scenarios, and there are some pretty bad ones for markets and then better ones for markets, and they all have their own probabilities. Looking at the liquidation map, you can see a lot of longs actually got wrecked. So over $1 billion of longs got wrecked, primarily on Ethereum. That was where most people were levered up, and then Bitcoin closely behind it. So this is obviously a symbol that people were starting to take on leverage heading into range high. And we did see this as prices started to push into that 110K mark, and Ethereum pushing into 27 to 2,800. We did see that the open interest was increasing. That's something that I highlighted on my last show. Open interest increasing into a resistance level often does lead to pullbacks, at least in the short term, and that is what we saw here. Market just resetting a little bit. Some shorts got wiped as well, because price did have a big wick, and late shorts often get punished during events like these. I wanted to read out Fabian's market update from the Mars High Club Discord this morning, because he's all over the macro situation here. He says he'll think about it more in detail tomorrow in terms of the implications, but I have no short-term positions to hedge now, and I'm not in a rush to catch this knife just yet. We had a total of 3 Israel-Iran war escalation moments last year, although this attack seems like it could be more serious than the prior ones. But in any case, markets trended a little bit lower following the first attack. I'm going to show you that very, very soon. In all 3 of those instances, as the uncertainty over retaliation and how far it would go weighed on price for a few days/weeks. Investors also don't like to hold over weekends during times of geopolitical uncertainty, so there's a decent chance we could see ETFs and institutions de-risk tomorrow, who are likely also just looking for a reason to book recent gains. I'll make a more detailed post on it later, but see Bitcoin PA following April 12, July 31st, and September 29 last year for reference, especially going into the first weekend following an attack. So what I did is I took this post and I took it a step further using a new AI-powered research strategy that I've been implementing. I did a thread on this yesterday. It's about how CoinGecko has now just released its API MCP integration, which allows you to have all of the price data and hook it up to an LLM like Claude, which is absolutely amazing because you can get price data and prompts on altcoins and Bitcoin in real time using an LLM. So I used this integration in order to build a custom dashboard for today's video. This is all using AI, but it's using real data from CoinGecko, and it just shows you how amazing AI is at the moment. And this is just an example of the type of thing that I'm using on a day-to-day basis for my own research. But when I was putting this together, I thought, wow, it would actually be an amazing thing to show on the YouTube show because you can build an entire like probability and game plan set using AI, using real live market data. So this is what you can see here. This is all the live market data on Ethereum, Bitcoin, S&P, gold, all built this myself on Claude in a few minutes using CoinGecko. It took a bit longer than a few minutes because I wanted to tweak and check data. But what I've built here is I've built a dashboard to show you the market psychology during geopolitical shocks. So you can see that typically every major geopolitical crisis triggers a remarkably predictable sequence of market behaviors. Understanding this pattern provides traders with a tactical edge during moments of maximum uncertainty. Key market insight number 1. The initial shock window is 0 to 48 hours, which we're currently in. Markets enter a state of pure price discovery. Algorithmic trading dominates as fusion decision-making temporarily freezes. This creates extreme volatility spikes, as we saw, which resulted in a lot of people getting wiped and liquidity gaps across the market. Bitcoin's correlation with traditional risk assets typically peaks during this phase, which is why we saw the Bitcoin sell-off prior to the S&P 500. If you keep scrolling further down, what I've built here is Bitcoin's response versus the S&P, Ethereum, altcoins, and gold to geopolitical crises, and this is indexed. So you can see here on the right, this is very, very interesting. Bitcoin typically bottoms 14 days after the beginning of a geopolitical crisis. Now, of course, as I'll show you in a minute here, there are different scenarios which could impact this trajectory. But if you want to take the average, that is what we have seen across what Fabian also said in the Discord, the last few major events like this on April 12th, July 31st, and September 29th last year. And you could see 14 days is roughly the time for Bitcoin. It also correlates with the S&P. Gold typically, because it's on the inverse to risk assets, peaks during this period, 14 days in. And you also see altcoins also mirroring Bitcoin, although altcoins sell off sharper. So you can see the initial sell-off for Bitcoin is smaller. Altcoins in the first few days typically sell off the sharpest before also bottoming. Remember, this is an average, so this time can be different. And then you can see altcoins obviously recover quicker because they dropped harder, and you see Bitcoin typically recovers quite aggressively and ends up actually net higher from day 30 to day 45 onwards. And this theory is that, as you can see here through Key Market Insight 2, that Bitcoin is behaving a little bit more like gold as a safe haven asset. And that's why in times of crises, it actually ends up outperforming the S&P coming out of it, which means Bitcoin for me, if we get any further downside, and let's say we do go to 100K over this 7 to 14 day mark, that would be one of the best buys in my opinion. Not just altcoins, because I think Bitcoin can actually outperform the S&P on the bounce. Obviously, it sells off more aggressively in the beginning of a bounce. You can see here I also built an altcoin liquidity crisis playbook, so it typically shows you the impact. The biggest impact is on small and mid-cap alts during the first period, and then you'll see Bitcoin responding first, and then typically alts will follow Bitcoin. I want to skip a lot of this because this is, just going into a bit more detail on what I just said. I want to go down to this last section, which I think is most relevant to you. This is the forward-looking scenario analysis. So this is a Middle East escalation probability matrix. So you have scenario 1. This is regional containment, 40% probability. And of course, this is just based on the AI prompts. There's not an exact black and white probability for these things, but this is the rough probability that I think is generally in line with my beliefs as well. So scenario 1 is an S&P 5 to 8% drawdown, Bitcoin 90 to 95K support test, then rally to new all-time highs after. Altcoins minus 20% average drawdown, selective opportunities emerge. Gold 3,600 to 3,800 sustained rally target. You have scenario B. This is the worst scenario. This is the one I hope doesn't happen for the world or for my altcoin or crypto bags. And this is the major power involvement. This is when other countries get involved. Things get a bit messy, aka escalation. S&P goes to a larger 12 to 15% correction. Bitcoin goes to the 75 to 85K range. So this would mean a break of range low. I think this is honestly a little bit aggressive on the AI's front, even if, other people started to get involved. I think maybe this zone here is a logical stopping point, the 92K zone, but that is a scenario on the table if things got really, really worse. I personally don't think this will happen, and this is obviously not above 50%. The Claude's given it a 35% probability, but this is just something to be aware of. Gold, 4,000 plus breakout, obviously, inverting risk assets. And then scenario C, this is rapid de-escalation. This is definitely on the cards, but it's something to be aware of. S&P 500 V-shaped recovery to new all-time highs. So basically saying, maybe over the next few days it dips and then ends up recovering. Bitcoin dips and then it ends up going to highs afterwards. Altcoins as well follow Bitcoin, and gold ends up retracing. So this is just a rough forward-looking scenario analysis. If you want to build your own on Claude, you can also put your own probabilities in. I would say I'm leaning towards probably a mix of scenario A and scenario C, where you see a little bit more potential downside in the markets, enough of a reason to be risk off at least, and then you see some sort of V-shaped recovery a bit later, maybe not straight away, but maybe within the coming weeks. Probably the coming weeks. I wouldn't even say months here. Obviously, summer has another 2.5 months, so that's a decent time frame to look at for a new all-time high test at least. But I think we might see a bit more downside in the shorter term, and that is also aligned with Paradise, our head low time frame trader's thoughts in the Discord. You can see he is projecting a potential sweep of 100K, and this would also be a bid zone. And then what happens after that, we don't know, but this is a potential opportunity. So you want to be looking at alts that actually line up with that level. So my overall thoughts, I'm going to get into altcoins now. But my overall thoughts are, we don't know what's going to happen. I'm not a geopolitical expert, but what I do know is that markets typically take a little bit of time to resolve. We saw that historically Bitcoin took 14 days on average to bottom. I think this time will be similar in the sense that, yes, you could see maybe a sell-off today and then a bounce tomorrow or a bounce on Monday, Tuesday. But in terms of full resolution and full sentiment coming back to the market, this might take a little bit of time. This isn't something that's, going to go away overnight. However, the important thing to note is that typically the fear of the event is worse than the actual event. So if the market genuinely starts to believe there'll be some sort of strong retaliation, the market will typically sell off on that before the retaliation actually happens. So just keep that in mind. Generally speaking, I think this dip is for buying, just based on the trend that we're seeing in the market. So the trend for me on a macro perspective for Bitcoin is a strong uptrend. And I'm also seeing the same on risk assets. And, we all know altcoins are high betas. So they'll operate under the same pretense as Bitcoin and the S&P. But Bitcoin is still in a major macro uptrend. I don't think this is going to affect that. I think that means any opportunity or any trigger like we saw with the tariff news to potentially go long whilst we are still in a macro uptrend, this would be a great opportunity to accumulate. And it does kind of overlap with my general thesis that I've been talking about for many, many weeks and months, that summer was going to be choppy, that summer was going to be maybe a bit slower, and I still think that's going to be the case. I don't think we're ready for explosive all-time highs. I've been saying for a long time, I think that comes later in the year. So now, this period is, if you do get opportunities to bid, probably one of the best periods to do so before Bitcoin does eventually go to new all-time highs, because I don't think this trend is over just yet. I still do think we have that final strong leg to the upside on Bitcoin and stocks as well. So for that reason, these events are actually great opportunities to accumulate. Not great that it's happening as a human, but if we're taking a purely analytical look at markets, these are opportunities to capitalize. Now, I want to talk about how you can go about capitalizing in the most level-headed manner possible. And I think this tweet is a great framework specifically for altcoins. So I've talked about Bitcoin. 100K is a zone I'd look to bid. If we break below 100K, I would cut and then look to re-enter maybe in the 95 to 96K zone. But if you're just holding Bitcoin and stacking, then you can kind of DCA on the way down, catch a knife, so to speak. It has been a strong asset. So catching a knife on Bitcoin's a bit less risky than catching a knife on alts. But in terms of altcoins specifically, if you're looking to deploy capital, the best thing to do is prioritize coins that A, got aggressively bid on the dumps. This shows that there is relative strength for the asset. B, avoided a slowed bleed or showed strength prior to the dip. C, are defending key high time frame levels, so haven't had a structural breakdown. D, captured attention ahead of broad macro flows or poised to, and E, are linked to narratives or catalysts that can reignite quickly. So the coins that I would be looking at are in the sectors that have showed the most strength. So recently that has been DeFi. You could also see some select L1s have performed well. So DeFi, for example, the stablecoin narrative, the ETH beta narrative, these are some of the strongest coins right now, even in the midst of a dip. And these are some of the ones that also recovered the best after the initial liquidation event last night. So these are the types of coins that I'd be looking at right now. If you want to go and spot these coins for yourself, you can go into velo.xyz/market. You can go into price changes, look at top gainers over the hourly time frame, 4 hourly time frame, and you could see the type of assets that are rallying. You've got FHE, which is my network, Subsquid, coins like that are rallying. They have showed some strength in the face of adversity. On the 4-hour chart, you can see things like AAVE, PENDLE. Don't take this at face value, because there are always like scam pumps, like coins that sold off aggressively then wicked, so then the data will look really good. What you should do is look for coins with like similar trends, and you could see a few here have similar trends. For example, like PENDLE is RWA stablecoin narrative, which is quite hot at the moment. JITO, Solana staking, we're hearing rumors of Solana ETF. Subsquid, that's already been really strong prior to the dip. So you've also got to use your own discretion when looking through the data, but an app like Velo can help you spot it. Down to Bubbles as well. One very simple thing you can do is go into Bubbles, and then whenever there is a slight rally in the market across that corresponding time frame, like right now there's some coins are bouncing, just flick onto the hour and you can see what coin, this is really simple, but you can see what coins are catching a bid. So in the hour, Aave is catching a strong bid, Hyperliquid's catching a strong bid. This overlaps with the narratives we've been discussing about on the channel. Sky, which was Maker, is catching a strong bid. And if you want to go into the 100 to 200 category, you'll see other coins that are catching a strong bid. PENDLE, PENGU, these all have really strong narratives and kind of align with what Game for One's checkbox was here. Coins that got bidded aggressively. You're seeing that here on the hourly recovery chart, but also a lot of these coins, you'd have to go and chart them for yourselves to see if they captured high time frame levels. But one thing they do is they capture strong narratives and catalysts in the market, which can give them, broad strength over the slightly longer term here. So you want to be trying to get into the coins on the dips that have showed strength. Now, you might ask, well, does this mean we're out of the woods? Not necessarily, because if Bitcoin went down to 100K or even lower, you would probably see some of these altcoins go even further down. But you already know that the market's shown its hand. It's shown the propensity to bid these coins. It showed that these are some of the favored coins in the market. So these are the types of coins to mark on your TradingView watch list and have alerts so you can actually bid into them if they get a further dip. For example, Syrup, you have, it is holding a high time frame level. It wicked down into the money noodle. If we retest this zone, that could be a potential bid zone to add. Yes, it can come down, but this is a coin that you can look at. Hyperliquid as well. It hasn't had a retest of the daily money noodle since it flipped it in April, but this could be your excuse to finally get your hands on some Hyperliquid, maybe in the low 30 zone, $30 to $35 zone, if things keep getting worse. SPX, this has been really strong recently, but this is a good example. Flipped from a bear trend into a bull trend on the 7th of May and is finally going to come down and test the money noodle, I think, for the first time in a while. This could be a nice bid for you to make, potentially. It could have a bounce here and then keep going down, but once it meets the noodle, probably at $1.10 to $1.20. So these are the types of things. They had strength prior to the dip. You're finally getting a sell-off. Keter as well as another coin. So there are a few coins where, you can have your lower targets, be patient, but accept the fact that they were showing strength. So come up with your watch list and then actually capitalize on it when the market dips. Market dips are great opportunities to capitalize. You just need to be patient and you need to go in with an actual system and key levels that you are going to bid instead of just, flippantly, randomly bidding, being like, by the fear, it's all going to be good. Yeah, it might all be good, but it's better to have a plan than just be completely flippant in the market. And hey, even if this is a V-shaped recovery tomorrow and the market just instantly recovers and Bitcoin goes back to range high, that's fine. I mean, we still haven't broken range high yet. We still haven't had barely any moves on a lot of altcoins. Those moves would start to present after Bitcoin's recovery. A lot of alts are going to be slow out of the blocks. Bitcoin's probably going to rally first, so you'll have plenty of opportunities to position. That's why balance of probabilities, I'll take the defensive approach here, at least have my base case in my head that there's going to be further downside, and then if there isn't further downside, then that's fine. I don't feel like I've missed the move. I'll just get into the next move on the next rotation, which will come by nature of the fact that the market is risk on again. So that's my general approach to the market right now. Now this leads me into the point that I touched on earlier in the video and may be mentioned in the title or thumbnail of this video, and it's the fact that I'm a little bit more risk off right now in terms of capital. Now, I wanted to break this down and just give you guys a general overview as to how I am currently approaching the market. I'll try and keep this short, but you can go into my X and look at my full post, which goes into this in more depth. So in the past, I would hold an altcoin portfolio of 70, 80, 90% altcoins, and I would hold little cash. Now, this was great when the market was rallying because, I would maximize these moves more. But what I found is that every single time there was a drawdown, an event like today, or, just the market experiencing a downtrend, I would find it really, really hard to remain emotionally sound, and I'd be extremely tempted to sell my positions because I felt like I was too exposed to the market. So the big change that I made this year, and if you've been watching the channel, you're in the Discord, this isn't news to you. I've spoken about this many times, but the big change that I made this year was holding more cash at all times. So I became comfortable with maybe not maximizing every single uptrend, but maximizing my time in the game and maximizing my survival odds and my ability to tap into liquidity by holding more cash at all times. So right now I'm sitting at around 50% cash. I actually want to make that even higher, maybe 55 to 60%. And this isn't because I'm scared. It's because I think it's the most capital efficient way for me to play the market. I'll explain. Point number one. Most rotations are shorter nowadays. We know the market has structurally changed. I mean, even over the past few days, we've seen Bitcoin sneezing and alts going down significantly. And whenever Bitcoin pumps, yes, the strong alts pump harder, but many alts have just underperformed Bitcoin. That's the reality. And that's because of the high altcoin dilution, unlocks, and dispersion in the market. And because of that, rotations are a lot shorter and attention's a lot shorter. And although there are massive opportunities in the altcoin market, holding a huge bloated portfolio of alts no longer skews the odds in your favor, in my opinion. So what I prefer to do in this environment is have higher liquidity because that enables me to get into high conviction trades when I see them arise. A great example of this would be Launchcoin. I took a big position in Launchcoin, made a lot of money off that trade and that ecosystem. And the only way that I was able to have the conviction to make that bet is because I had a lot of liquidity, 50% in stablecoins. Now, if I had 80 or 90% in other altcoins, what I essentially would have had to have done is sold other altcoin positions, perhaps at inopportune times, in order to fund that trade. So not only am I, taking on more risk in the market, but I'm also not maximizing the good trades when they come in the market. This happened many, many times in 2024 and was one of the reasons why I decided to make this change this year. Point number two, I just feel more emotionally in control when I hold more stables. One thing that I've learned about myself is that this kind of stuff requires you to do a lot of reflecting on your own trading. But I think I'm a good trend spotter. I think I have a good natural feel for the market. Even a few days ago, I felt like something was off. I messaged my friend, you could see here on WhatsApp. I said, the timeline's so bullish, yet prices have barely moved. And retail is nowhere to be seen. You're noticing the same. Everyone is max bullish, including many smart accounts. ETH and Bitcoin obviously look good and on-chain's interesting, but the overall thought still stands. It feels like a bit of an echo chamber. And this was on Wednesday before the dip. I just noticed everyone was so bullish, but Bitcoin was heading into resistance, and I was just trying to make sense of it. Something just didn't feel right. So that kind of intuition, I think, is one of my strengths. I generally have a good intuition with the market, but where I struggle, and this has historically hurt me, is I'm not always the best at executing my ideas. I would have good ideas, but I wouldn't have the emotional ability or the technical ability, not ability, just I guess diligence to actually execute them. So this year, I found I've been much better at executing my ideas. Not perfect, but much better. I was able to buy Bitcoin at 75K, for example, during the fear when everyone was panicking. I'll be able to buy this dip if it goes deeper whilst everyone's panicking, and I'm able to execute my ideas a lot better because I'm holding more cash. So yes, maybe when the market pumps and has altcoins have big moves to the upside, I make slightly less than others, but I don't even know if that's the case, because likely if the altcoin market's doing well and I have more liquidity, I'll just be deeper into specific altcoin sector trades during that period of time. I could still go from 50 down to 40 for a week and then go back up to 50 once I take profits, right? So yeah, my counter argument to that would be more liquidity means more confidence to actually go into high conviction positions and take high conviction trades, because there are always trades happening in the market. I'll be completely honest with you guys. I don't think I even need to hold any altcoins to maximize the market. I think I could hold 100% stables at all times and just go in and out on specific opportunities. Oh, launch coin trade, go in, go out. Oh, I see a trade on this meme coin, go in, go out. Oh, syrup looks good, it's breaking out. All right, I'll go in. Here's my inval, go out. Okay, I'm seeing a rotation to RWA. I'll go in, cool, make some profits, go out. I genuinely think I can do that because I think I have an edge in the space. But I don't recommend that for everyone. And this is the point I'm going to get into soon. Just because I'm doing this doesn't mean you need to do this. I think some people that don't have much time or an edge in the market, or are dealing with smaller portfolios, it actually does make sense to be 80% exposed in certain moments of the cycle, or it does make sense to just take more of a buy and hold approach as opposed to a trading approach. So I don't think this is wise for everyone. I still think there's merit in holding a portfolio. I just think you have to question these things and question why you're doing what you're doing in order to become a better trader. Now, despite me holding a lot of cash, you can actually flip the question. You could say, all right, but why don't you hold 100% cash? Why are you still holding 50% in the altcoin market? If you think you could still make good money even if you had 100% cash. And the reason is, just as I'm trying to balance having enough liquidity, I'm also trying to balance having decent exposure to alts, because there are some narratives, right? And there are some coins that I know are going to do really well. Like I think Hyperliquid's are going to do really well. There are some tech coins, RWA coins that I think will do well. Some AI coins which haven't run yet that I think will run at some point. I don't exactly know when these narratives are going to pop off. I know AI is going to come good at some point, but is it going to be next month? Is it going to be at the end of the year? Is it going to be in a few months? Of course you can trade it. Of course you can wait for some strength to get in, but I do want to hedge against potential bad execution at the time. And my way of doing that is still having some exposure to the altcoin market. And that's why I still have a 50% portfolio of active positions that, are spread across the market, from L1s to AI to, coins that have gained a lot of traction recently, like Hyperliquid, for example. I'm still positioned in those coins because I don't want to be completely on the sidelines if they pump. But balancing that out with another 50% of cash allows me to take advantage of the shorter term trading opportunities alongside the short term opportunities. So look, this could probably be a full video which goes into other portfolio strategies, and maybe if you want that, let me know in the comments. I could do a video comparing different portfolio allocations based on different amounts of capital, because obviously for some people, if you only have $5,000 to $10,000, you're probably going to be a little bit more risk on if you want to turn it into 50 to 100k. Whereas if you've got 100k, 200k, you only want to make 500. You can afford to be more risk off, and as you get into the millions, you can go even more risk off because you're trading with more capital. So obviously that impacts things. This could be a full video in its own right, but I did want to touch on it today because I just wanted to reiterate that, even a guy like me who's, bullish on where crypto's going, bullish on many altcoins in their own individual right, doesn't need to be 100% exposed to these altcoins all the time in order to A, make money in the market, and B, capitalize on moves when they come. So yeah, if you want to read the full post, you can go and read that. But this is holding me in good stead because I will get probably questions about like, oh, how are you buying the dip? How do you still have money to buy the dip? Well, the reason is I'm 50% cash and have been since pretty much the start of this year, maybe a little bit later, but it's been a gradual thing that I've done. And this is actually, I don't know if I can get the actual tweet up, but This was always part of my plan. Ever since mid last year, it was part of my plan to be 50% stables by March. The OGs that follow me on Twitter would have seen that tweet. So this isn't anything that I didn't plan for, but I wanted to remind you guys of this. But obviously, in this environment, it holds me in good stead, right? Because if the market ends up getting worse and going more south, I can capitalize on these big dips. So you've got to do what you need to do to keep yourself in the game. And that ultimately is the number one constituent success in crypto, survival. I will see you guys in the next one. It's a little doom and gloom, by the way. I think from a macro perspective, this is a buying opportunity, but maybe not right this second. Maybe it's a buying opportunity in 7 days, 14 days, whenever I think, and I'll obviously let you know I'm making daily videos at the moment, right? But whenever I think the ultimate opportunity to accumulate is, and when I'm laddering in hard, I'll let you know. I'm just not doing so today because I just don't think the risk reward's there. Either I'll bid a bit lower or I'll wait for a confirmed reversal and then I'll get in on the show of strength, at least with a bit more confidence. You don't always need to nail the lows either. It's actually better to put more size into a higher conviction trade than half-ass a bottom pick in the market. I'll see you guys later. Have a good one. Peace.